My name is John Watkins. I am the Director of the University Careers Service. I'm also a qualified accountant and spent 15 years working in an accountancy practice supporting businesses of different sizes and helping them out from an advisory and compliance perspective. Tax and national insurance are amounts that are deducted from an employee at source by their employer and paid into the government effectively to look after both our own personal requirements but also the national requirements, and therefore a deduction is made direct from your pay slip each week or each month depending on how you're paid, and at different rates according to the amount that you're earning. The amount that you have to pay is very much dependent on how much you earn. So there is a threshold below which you will not pay any tax on national insurance. The starting rate of tax is at 10%, so the lowest earners will pay at that rate, and it goes up incrementally over time dependent upon the amount that you're earning, up to a 40% band. The current government have also speculated about a higher rate of tax as well, and it's always likely that this is going to be something for conjecture in budgets and could well change over time. You have to pay tax and national insurance, but if you are employed, it is the employer's responsibility to make all the arrangements so that you are deducted effectively without seeing the money come in at all. So it should appear on your pay slip each week or each month to show how much has been taken out. There is a separate coding that is used for each person dependent upon your personal circumstances that relate to age, whether you're married, and any other personal situation that might give you an entitlement to a more of a deduction, and that can change again with your personal circumstances. It would be your responsibility to inform the tax office that your circumstances have changed, and they can issue a new or temporary tax code and then correct it as the year unfolds. If you're self-employed, then there's a different arrangement for paying tax and national insurance. National insurance is still paid, but it's under a different remit and a different amount is applicable. You wouldn't pay tax as you earn your money along. You would tend to pay tax at the end of a year when you can see how much you've earned, and therefore you would have to complete a self-assessed tax return. The deadline for that is either dependent upon whether you submit it yourself or whether you wish for Customs and Revenue to process the tax return themselves for you. It's tended to be well publicised. The 31st of January is the current date when that has to be done by, and then you will receive a request to settle an amount if you owe money. If money is owed back to you, then a refund is issued. If you're working abroad, then you really have to fit in with the arrangements for that particular country. So they may have their own variant of national insurance and tax, and that is what you'll have to do. If you happen to be working for a UK organisation and are seconded over to an overseas arrangement, then that could well be different, but normally you fit in with the requirements of the country in which you're based. It is always the employer's responsibility to ensure that the right amount of tax is being taken from the employee, and at the end of a year they will issue each employee with a return that says how much has been deducted, so there's an official record for each person to then to be able to maintain and to review. So the responsibility is there for you to review to make sure that it is accurate and that you have been taxed at the right amount. If you are somebody who simply has one job and it has no real complications with it, then it really ought to be very straightforward. You don't need to be sophisticated from a financial perspective. If, however, you have multiple sources of income, several different jobs and lots of things going on, that may be the time when a professional advisor would be useful to employ at that stage. In terms of your overall career, money clearly is something that's very important. You need to be able to earn sufficient income to pay the bills and live the lifestyle that you want. Often in the early part of a career, money tends to be a big feature. It tends to be something that people judge the quality of a job on. In reality, as your career progresses, you recognise the importance of other things. Maybe you want to get the work-life balance right, particularly if you have family or other commitments, and also the importance of the challenge of the work, the people that you're working with, where you're working, the flexibility, and other factors come into play. So I would often say that money will always be in the top 3 or 4 priorities for most people, but as time goes on, very often it falls into that 3rd or 4th place and other factors come into play that are more important. The old adage is really that however much money you earn, you tend to be able to spend it. So it's not necessarily all about trying to earn as much as you possibly can. It's about balancing all the other things in your life.